what are some examples of alternative investments that captives can invest in?
The most successful example that springs to mind to me is, clients that have set up, lending facilities for second trust deeds, potentially hard money loans, not to necessarily their related businesses. If you've heard us talk, you know that a big no-no with the IRS is lending money or repatriating money to the companies that have paid in the premiums. Circular flows of cash typically frowned upon, but really actually using the captive funds and setting up a loan portfolio to people you might have relationships with, trusted borrowers, affiliated companies, but again, an institutionalized, if you will, portfolio of loans. So that's some really nice, things that we've seen there. Other alternative investments that we've seen, some of our clients, getting into limited partnership allocations, certainly, real estate here and there, although, captive C Corp, not the most ideal place to own real estate, but, really any of these items, they end up on the table after a period of years, and you've got surplus that you can allocate to things beyond stocks, bonds, mutual funds, traded REITs and cash. So there aren't really any hard and fast rules right now in the domicile about how much you can allocate to these investments. However, there is a rule of thumb that sort of most of the regulators have adopted, which is an allocation or limitation of 30 to 33% of the captive's assets being allocated to these type of investments, whatever your alternative investment of choice may be. So, Max, what have you seen? You get a lot of these questions.
Yeah, I do. And certainly within that limitation, you can do hedge funds, you can do private equity, anything that's more illiquid. All of this is ideally subject to regulatory approval. So you just want to make sure that if you're doing this type of stuff, to let the captive manager know, so we can give you the heads up on whether or not we should get the nod first. In this world, it's better to ask for permission than forgiveness, generally speaking. I actually got posed the question of crypto the other day. Was expecting that question. I know for the most part, for corporate entities to set up an account for any type of cryptocurrency, it's far more challenging than setting up an individual account. I've not yet seen a captive own any crypto. Wes, Jared, have you guys seen it out there?
We have, and we had to go through regulatory, and this was Delaware, so they had to get regulatory approval, and they had limited the amount that they could have. And this was not with their reserves, it was with their excess capital and surplus. So when it's the first year's premium, you have a lot less flexibility. But once it goes the second year, when that first year's premium moves over to excess capital and surplus, then by going to the regulators, we could do that. We have one client that, loves gold, and, they invested a significant amount of their assets, probably like 25% of their excess capital and surplus in gold. And the Department of Insurance required them to take physical possession and have it with, a storage facility, not just themselves. So the Department of Insurance said, gold is fine. We're fine with you investing in it, but we don't want the physical gold bullion or ounce bars or whatever coming to you. They have to stay with, a third party.
You holding those in your office, Wes?
I am. They're right there. Yeah.